Good morning from the Singapore Fintech Festival, and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to kick off coverage for day 3 of the conference, we have Kelvin Koh. He's the co-founder and partner at the Spartan Group. We're going to take a look at investment trends globally in the crypto markets. Kelvin, thanks so much for joining us to kick off coverage. And it's interesting because you were previously the head of research for Goldman in Asia, and you managed a equity long-short hedge fund, and now you're in the crypto markets.
Yes.
What are some of the similarities and some of the obvious differences?
Yeah, well, I'd say firstly there are lots of similarities in terms of the way that the assets trade. So there are fundamental drivers that drive asset prices, token prices, and so given my background, sort of analyzing equities and following the markets, we can apply the same strategy in understanding crypto assets. So we dig deep into the project, trying to understand what's the fundamental underpinnings of these assets and what are some of the catalysts that drives crypto prices. But I would say, and the assets do trade very similarly to the equity markets. The exchanges behave in the same fashion, and the trading experience is very similar and very familiar. Where the differences are is I think crypto is a much richer environment in the sense that with equities, obviously that represents an ownership in a company, whereas in crypto you have assets that could represent the same thing in security tokens, for instance, where you own a network, but there are also other assets that represent different things. So for instance, we have payment tokens, we have tokens that give you the rights to the governance of a certain network. We have work tokens, so there's a greater variety of different assets, and different functionalities can be built into these tokens.
Yeah, because technically you can tokenize anything.
That's right.
Yeah. All right, so you're investors in the crypto fund. Are they only institutional investors? Do you think institutions in general are ready to invest and bring mass adoption around cryptocurrency?
Yes. So at the moment we have close to 30 LPs in our fund. Most of the LPs are high net worth individuals who are interested and early adopters in fintech and technology in general. And within our fund, we also have one family office. But I would say that the appetite amongst the family offices in the region, as well as institutions, for crypto assets is still relatively low. I think they're still in the very early phases of adoption. There's certainly a lot of interest in understanding what the asset class is all about, but I think the volatility of the asset class still poses a challenge for many of these more traditional investors. I would say in the US, it's a little bit different. In the US, we've seen many of the big endowment funds come into the space, including the Stanford Endowment, Harvard, Yale, MIT. We've also seen some of the pension funds coming into the space. So I would say the US is probably 2 or 3 years ahead of Asia in terms of the readiness of investors to engage with the asset class.
Which is not too surprising because they're always looking for alternative ways to drive alpha outside of equities and bonds. But really interesting, kind of unexpectedly, President Xi Jinping, he recently endorsed blockchain technology and said China should seize the opportunity to enable it, which is kind of a reversal of what he was saying in the past. What are your takeaways from this?
Well, first of all, I would say that that's obviously a very strong endorsement and statement for the crypto industry. And not surprisingly, it came literally a few days after the congressional sort of debate over Libra and the grilling of Mark Zuckerberg during that session. So I think China is sort of taking a very proactive stance with blockchain and cryptocurrency. And obviously, if you look at Internet 1.0, China sort of benefited from sort of being early together with the US in that movement, and that created giants like Alibaba and Tencent and Baidu. And I think China recognizes that blockchain and cryptocurrency could sort of represent that future, and it doesn't want to lose out in that race. And I think the significant part about President Xi's speech, not only in terms of what it represents of China's commitment, also is what that will mean in terms of the ripple effects across the world. We're already seeing that places like Korea, for instance, are thinking about their own blockchain strategy in response to what China has just announced. And we've seen other places like Russia, like France and other European countries starting to engage in the same sort of conversations. So my prediction is that over the next 6 to 12 months, we will see a slew of governments come out and talk about what they're going to be doing in this space.
Right. I mean, if there's any indication in terms of the traffic flow and the amount of people that are here in Singapore, as it's really the fintech hub, it's no surprise to me. Let's go back to Libra for a second. Do you think this will actually go ahead? And are there any other projects that you're excited about?
Yes. Well, I think Libra is likely to go ahead. They have already set up the Libra Association, and the Libra Council members are already sort of continuing with the work that they began with Libra. Now, it's questionable whether Facebook continues to be involved in Libra, and Mark Zuckerberg has explicitly stated that if the US government wasn't comfortable with Facebook being involved, Facebook will pull out of the project. But that doesn't mean that Facebook couldn't get involved through its Calibra wallet, right? So that could still go ahead together with Libra Association, but Facebook may not be part of the Libra Association. So I think that would still proceed. That's my expectation. I think in terms of other projects, one of the projects that we're quite excited about that's going to be launched shortly is Polkadot, which is started by Gavin Wood, one of the co-founders of the Ethereum network, which everyone is so familiar with. And Polkadot, the exciting thing about it is that it's a more advanced version of Ethereum, and what it's going to bring is not just scalability, but it will allow these disparate blockchains that we have at the moment to interoperate with one another, so that we now have a network of networks as opposed to individual networks. So that's very exciting.
All right, let's wrap up here with your outlook for the price of Bitcoin in 2020. It's so interesting to watch this asset trade. It feels like it's a crowd kind of trade, certainly on supply and demand. A little bit harder to analyze, if you will, because there aren't core fundamentals behind it, like a stock, for example. Yes. Do you think it's a little bit too new to chart out from a technical perspective, or is it really more of a crowd kind of trade?
So I think there are various things that drive the price of Bitcoin, right? There is obviously technical factors that drive the price, but there are also fundamental factors, right? So and there are also supply-demand factors. So one of the things that we track very closely for Bitcoin is we track the adoption and usage of the network, right? So we've seen that the number of transactions on the Bitcoin network has been steadily rising over the last few months, even though the price has corrected from the peak back in early 2018. We've seen also the network hash rate, which is the amount of electricity that miners commit to the network, has also been steadily going up over the last 6 to 12 months. So those are fundamental signs of a healthy and growing network. In addition to that, 2020 is exciting because we are going to see the third halving of the Bitcoin supply in 2020. So roughly every 4 years, the Bitcoin incremental supply halves. And when the incremental supply halves, what it means is that the supply and demand balance starts to go out of balance, right? And if the demand is growing constantly, then you have this upward pressure on prices. So we fully expect that heading into 2020, we will see Bitcoin prices starting to rise. And our forecast for 2020 is that we expect sometime during the year, the price of Bitcoin will likely exceed $40,000.
Oh wow, amazing. Yes. Thank you so much for joining us at the Fintech Festival.
Thank you.
Thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.